What a wild time to be alive. And it's only February. So this week we're going to talk stocks, and what a better time to talk stocks, construction, and business than this time right now. Let's get into it. Okay, now you're going to listen to this podcast a week in advance, or I guess a week late, sorry. Not a week in advance, a week late. So understand, when I talk stocks, I have to do these disclaimers. This is not a research report. This is not any sort of investment advice. All right. I want to make sure I'm pretty clear because you can get in kind of some big trouble talking about stocks, insider trading, that sort of thing, right? And I just want to make sure you guys know all this kind of information I'm going to give you is all just my own basic opinion, all right? Just because of the kind of rules, I do own stocks of BP, Coca-Cola, Bank of America, Ford, and General Electric, all right? Just so we are set, everything's squared away. This is all just based on opinion and just telling you some news stories. So I was going to make this podcast about starting, investing, and building something, right? Whether a company, there's some ways you can invest with your money, what a stock is, that sort of stuff. And then Reddit happened. My God, Reddit happened. Okay, in case you guys were living underneath a rock and the news is not reporting on this for whatever reason, I guarantee when you guys hear this, this is all going to be gone. But right now it's kind of at the peak and I can see it kind of tipping over the opposite edge. I have no idea what's going to happen next. So for those of you that do not know, Reddit is a internet website with a bunch of communities where people share things that they read on the internet. I read it, right? There is a community on Reddit called Wall Street Bets, and they are amateur day traders, which means they trade stocks, maybe 1-2 stocks on an app. They invest in futures, like how a company is going to do in the future. Most of you guys listening to this, if you have a large job or you're not a business owner, you have, I guarantee, probably some sort of 401k, which are invested in some sort of stocks, right? Now, these 401ks often are owned by what we call hedge funds. Hedge funds invest a large chunk of money into stocks and futures that they think is going to make their clients the most money. It's very common for companies to bet, or hedge funds, I should say, to bet on companies' either success or failure. We saw this with Moderna, and right now we're seeing this with GameStop. A lot of hedge funds, billions and billions and billions of dollars, are betting that GameStop is going to fail this year. And I'm going to be real with you. I don't own any GameStop stock, but GameStop will go under. It's not going to last. With, video games and the way video games are going, it will not last. We're starting to stream video games now. Our Wi-Fi is getting up there. There's no reason for video game retailers to really exist anymore. And it sucks for me to say because I am a millennial. I loved GameStop going in as a kid. It's just going to be gone. Well, it all started with a post by kind of a future company who reports on different things and gives their opinion on stuff, Centurion. And it's been started really since like 2019, and it finally really capped over right now. So a group of Reddit users have bought stocks or shares of GameStop, right? Despite a bunch of investors betting the company will fail. So this is what happens. It's all supply and demand. There's a set amount of stock GameStop has. When you buy it and you keep asking to buy it, the price naturally goes up because as the demand goes up, the supply is remaining the same or going even down. It's going to increase the total price of the company, of that share, that split. In case you guys don't know anything about stocks, large corporations will split up their company into what we call shares, and you get a share of the company. We actually call those stocks, right? And it's a little slice of the pie, and in addition, you get some benefits. One, you get to vote on different things in the company. Like if you want a new CEO or board member, whatever, you get to vote on it. You also, if there's any leftover money at the very end of the year, you get those dividends back, and those are extra funds. Oftentimes they're only like a few pennies, maybe 10 cents, but some stocks are known as dividend stocks and they really pay out a lot of dividends, right? And those are something that people slowly gain money with, okay? So we set the stage of what a stock is. Now, investors are betting in these things called futures, how a company is going to do in the future, okay? So they're betting that GameStop, I always say GameStop, but that's what GameStop is going to fail, right? So they're betting that their stock is going to go down by either 50% or whatever. Instead, these Reddit users made the stock go up more than like 14,000%, right? Insane fluctuation there. I swear God, 14,000%. So the idea is that they drive the price up, all right? They drive the price up when they keep asking and keep buying, so the price naturally goes up, right? So what they did was they essentially forced a rally, which is what they call it. So when a stock is kind of going down, they force a rally and rally it back up by creating a demand. And as a result, the stock jumped more than like 822%. In the beginning of the year, GameStop was trading at $17.25 a share. So a piece of the company traded at that. On Monday, it was at almost $160 a share. And then today, let me look it up right now, GameStop is at $193. It actually lost half its value today. When I checked this morning, it was at $400. Crazy, crazy, crazy. So a lot of stuff started happening very quickly, as always, right? On Monday, because there's this thing, when the stock market closes, there's after-hour tradings for a set period of time, and you can still trade and stuff, but the stock market isn't actively watching it. The ticker isn't going up or down, right? So Elon Musk, because that guy is involved in everything, tweeted out that the price, or he kind of just tweeted out that, like when I said GameStop, he basically tweeted that with a link to Reddit. And after that, his 43 million followers decided they're going to also, some of them were going to buy GameStop. Dang it, every time. GameStop stock. I'm just going to call it GameStop for the rest of this thing. Hopefully you guys are okay with that. So on Thursday, it jumped even higher, right? Today is Thursday. Jumped even higher to 483. Now it's back down to 150, 3 or something. So the New York Stock Exchange halted trading, and they'll do this every so often, all right? It's very common for the stock exchange to halt trading in case there's a problem or there's so much demand, they're going to crash the servers, whatever, they'll stop it. The last time we saw this stop, the last time I really remember a big one was in March last year when all the stocks fell because of COVID. They stopped the stock then. Okay, so we're all caught up, right? We're all caught up. Now, the Reddit community also turned its eyes to other companies who people are betting against. BlackBerry, AMC movie theaters, Nokia, even Bed Bath & Beyond. They're starting to pour money into these companies to raise them up. Now, what really made the news today is that a lot of these app-based trading companies, or trading, developers, whatever, like Robinhood, TD Ameritrade, Webull, they've restricted trades of GameStop, AMC, and other fast-moving stocks. A lot of people are really upset about it, and there's a lot of criticism on this. Okay, so now you got caught up on what happened. That's like the big summary, and we're going to kind of talk about how did this happen and what does that mean for stocks and where we're going. So effectively, the Wall Street bets community realized that Wall Street themselves made like a really huge mistake. People known as short sellers who were betting GameStop fall has been too aggressive, right? So there's these things called short sellers. It's what a hedge fund kind of is. They're betting that GameStop is going to fall, and they're betting that GameStop was going to fall within a couple months or whatever, right? I can't remember exactly when they were betting, but a lot of these Redditors saying they're too aggressive. So they realized if they create an artificial demand with their own money, they could force Wall Street to recalibrate its bets, pushing prices even higher. So basically, they would raise the price of the stocks. Wall Street, the analysis and the analyzers on Wall Street would really have to readjust every model they have, and that would create like almost like an avalanche effect and really raise up the prices even more, because now Wall Street's like, oh, okay, this company is making twice as much. We're going to have to push back the months off a little bit more, which in turn raises the price because now they're doing really well, it seems. The issue is that some investors who couldn't even back up their bets against GameStop would have to pay even more. So it's just like betting money you don't have. So if you're betting your hedge fund and you're betting that GameStop is going to go under in 2 months, and you're betting $3 million, and you only have $100, you could be a millionaire. And that would actually be a pretty safe bet. I wouldn't, GameStop is going to lose 50% of its value in a month. Totally understand. It's a safe one. The deal is that it moved it up. Now your bet's off and you're wrong. And now you just lost $3 million because you betted wrong. So this activity that people are doing and going in is called a short squeeze. That's what they call it. That's where the short sellers are betting against GameStop are forced to buy more GameStop stock to cover their losses. So if you own a couple shares of GameStop and you are losing your money based on what you're projected, and these people are coming in and buying more and more stock, you need to buy more GameStop stock to cover that loss. So it's like an animal. It just keeps going up and up and up and up and up. And it kind of has the possibility to reach thousands of dollars, right? That's why we're seeing a huge jump in the value of GameStop stock, because it's just moving so much because everyone has to buy this stock to cover those losses, because ultimately people do know that they are going to lose money. Not people. GameStop knows they're going to lose. They're going to lose their money, right? They don't have the business. They don't have anything to back up what their investors want, so they're going to lose out. The issue becomes is who's going to be the winner in this situation. It's not GameStop. And clearly right now it's not the hedge funds. A lot of hedge funds have closed because they cannot handle the losses that they're taking right now on this. Okay, I talked about short selling real quick, and we need to pedal back a little bit so I can explain a little bit how short selling works. When people normally buy a stock, they're betting it'll raise or share enough profits that they'll make money and they put in. So when I buy a stock of, let me find a company right now. When I buy a share of Ford is trading at $10.72 right now. I buy a share and I am hoping that Ford goes up so I make more money. If I buy a $20 share, I buy a $20 piece of the pie. But if my pie goes up $10, that's $20 a share, I can sell it and make $10, right? That's essentially how a normal stock is bought. A short seller or shorts do the opposite. So they trade with borrowed shares and sell them and hope they can make money if the stock falls in the future. So if we call these futures for a reason, but they buy a stock for $20, sell it and hope that it goes down to $10, and they can make some money. So let's give you a little bit of a scenario, a better one. So imagine Ian is a public company, right? Ian Corporation. It's a public company. Its shares are worth $10. A short would borrow shares of Ian Corp and sell them for $10. Their bet is that Ian Corp stock will actually fall below that, maybe to $4. And if it does, they can buy the shares at $4 and pocket the other $6. Now, if Ian Corp stock jumps to $25, then the lender who made this bet possible may push the short to cover their bet. That would mean the short effectively has to buy the shares at the new higher price. Because what happened is they borrowed their shares. So they would have to buy those shares to cover that new higher price. When the short is right, betting against a company, they can make a lot of money. But when they're wrong, they can lose a lot more money too. And that's the scary part about betting futures. There are other options and tools to bet against companies' futures as well. There's tons of things, right? It's not just a short sell. So understand it's really infinite. I can spend hours and hours and hours talking about markets and money. But right now we're just trying to talk about this phenomenon right now and what that means. So GameStop shorts lost a bunch of money. And as of Monday, according to Market Insider, which is an analysis magazine publication, they projected they lost about $3.3 billion betting against GameStop. And to be honest, about 1.6 happened on Friday when the stock jumped last week. It's also worth noting, because the reason is that GameStop began the year as one of the most shorted companies on the market. Now, it seems like a lot of money, right? But it's kind of a bigger indication about how dramatic these moves were. GameStop shares were halted Monday because they were moving too fast. And that happens all the time, right? Either down or up too fast. It was halted today on Thursday. Now, these wild swings I don't think are going to remain popular forever, right? What's popular is retail investing, and when traders who aren't professionals buy and sell stocks, it's really easy for people to jump on the market. I think that's what a lot of people, they're halved on this. I think that it's good for people to be on the market and learn how to buy and sell companies, right? It's very, very good. A lot of these apps and stuff have no fees to even buy it. And we're going to talk in just a moment. I'm going to give you a quick little introduction to stocks and how to buy, right? So it's very easy to do that. I think GameStop is kind of once in a lifetime opportunity. I mean, maybe it'll happen again. It probably will. But this is the first time this really happened where it's so easy to buy something. It's insane. So let's kind of close this part of the conversation out. Big name companies like Robinhood, ED Trade, TD Ameritrade, that sort of thing has restricted trading for these companies, right? They say out of abundance of caution and unprecedented market conditions. Now, there's a bunch of indexes where the stocks are held, the New York Stock Exchange, NASDAQ. NASDAQ said that it will halt trading if it finds linked to unusual activity on social media, which I think is weird. The company says it sees its role as a self-regulatory organization. Okay, so weird. Regulators have the right to catch up on technology that's available. I'm just reading what NASDAQ has been saying on CNBC and all these stuff. I'm trying to right now understand it as I am talking to you guys. Yeah, but throughout the week, they've halted trades of GameStop, AMC because of the wide price range and heavy volume. Some people were buying thousands of shares of these stocks and pulling them up. And the craziest part is that these companies like CNBC and stuff went out and asked companies, them why this was happening. And executives from BlackBerry, GameStop didn't respond. But BlackBerry, I think Nokia's here, AMC, they're all like, yeah, we don't have no idea why this is even happening. And you may wonder, why is this happening? Everything is legal that they're doing. Everything is legal. They're buying stocks with legitimate money, probably, but they're all legal. They're doing legal trades. And some of them are trying to make quick money, and that's kind of their whole goal. I mean, a Redditor posted yesterday, I read, that we're in a war for the redistribution of wealth, right? Which is whatever. It's crazy. It's crazy to me. The Reddit community is locked, so no one can join. It's all private. You can't even read it. It's so insane. And then once they lock the community on Reddit, people started selling, and that's what we're seeing right now is a large sale. And I think the problem is that all these companies, people are starting to find out, are also paid by corporations. And so they're starting to take down these people's, I guess, free speech. I mean, I'm not going to get into that one on what we consider free speech or not free speech, but I think it's so wild that all this is happening. Man, I have no idea what is even going on anymore. It's insane. That being said, let's talk real quick about getting into stocks and the importance of them. Stocks is an important way of investing your money, right? Some people like to invest in property. Some people like to invest in bananas. It's whatever you prefer, right? You're betting a company is going to do well, and people are going to want to buy more of that company, and they're going to make you more money. At the end of the day, people want the dividends and the extra money the company is making. So the best way to get involved in this, if you want to get involved in stocks, I've been through a couple different apps on my personal trail. I have not done Robinhood or anything like that. I actually started out with Acorns, which takes your change from your purchases and rounds them off and adds them to a stock account, or not a stock account, but an account that you can use to trade stocks. I never really liked Acorns. It was really hard to put money in, and I got really more invested in stocks later on in my life when I first started teaching and stuff. I really wanted to get into stocks and buying and selling. In fact, the first stock I ever bought was Lumber Liquidators. Horrible stock. I sold that one about a year after I bought it. But what I did was I applied. So you have to apply and they have to accept you. Most of the time they accept you. The first company I really tried with is Ally Bank, and that one is pretty well known. Everyone kind of knows who they are, that sort of thing. The issue with Ally is they approved me for an account, but their app never worked. It never let me actually on the app. It always says it didn't work, that sort of thing. So I never really went with Ally. I went right after that and set up an account with Merrill Lynch. I guess their trading is now called Merrill Edge. They're a Bank of America company, but they used to be just stock trading, that sort of thing, IRAs, all that kind of stuff. And so now I trade off of that. I like Merrill because their analysis portion is amazing. They have really good guided investings. They have really good, you can see all your holdings, your accounts, your values of your portfolio, all that kind of jazz, right? There's a bunch of stuff people see and do on here. And yeah, it's kind of my go-to when it comes to investing. investing. I like this one a lot better. I think it has a lot better of an interface. It's really clean, really nice. And so I've always used it. It actually used to cost $15 or something like that per trade. And so it was a lot of money to actually keep trading and stuff. But now I think it was TD Ameritrade put it at $0 because they wanted to kill their competition. Everyone else made it so it was fee-free trading, because usually you have to pay someone to actually make that trade for you, right? Because someone technically is in Wall Street trading. Now, I explained what a stock was. I explained, how to actually start investing, right? Because all you do is just basically go on, set up your portfolio, put some money on. Then there's always a button that says trade. You search what stock you want, and then you make your trade, right? So I can actually buy, sell, do whatever I want to do. Also, another reason why I went with Merrill is that it allowed me to invest in different things like mutual funds, that sort of stuff. That's stuff that are large groups kind of pull together, and you can invest in one guy's, kind of thing. I like to invest in just my own stuff. I've always been kind of a day trader, because if I'm going to spend money, I would rather lose it like myself, It's almost like gambling, right? But you own like slices of companies, and to me, it's a lot more interesting than gambling is. And yeah, I've lost some money. I've gained a lot more money than I should. Now, why is this important for construction, building, that sort of thing? If you ever do make a company that goes this big where you're thinking about making a corporation and selling stock, this is an important kind of lesson. But it's also important for growing anything. This is a lesson in supply and demand. This is a lesson in betting, gambling on your own company, right? This is a perfect lesson for supply and demand. That's why GameStop is going up so high, because it's supply and demand, right? Something kind of crazy. But I wanted to talk to you guys a little bit about it. I want to talk to you guys about stock, why it was important about stock. Why did this whole thing happen? You'll never really see this. I mean, you probably will see it again, but this is the first time we're ever seeing this. It'd be interesting to see. You guys are going to see us on Thursday, or view this on Thursday. It's interesting to see what happens then. Like, how does all this change? I think it's going to go back to normal. Everything's going to be fine. But you never know. Could be worse. Anyways, guys, I hope you have a great rest of your day. I hope you guys start trading. If you do, hit me up on Twitter. Let me know what you guys think. Let me know what you guys think about this podcast. If you guys have any questions, I'm always on there too. I will see you guys in the next episode. _Chip Happens on Twitter. Let me know. I will see you guys next time. Peace. This has been an episode of the Chip Happens podcast. Thank you all for listening, and I will catch you next week with another exciting episode.